You're welcome to our Smart Money Canvas lessons today. Today's lesson, we're going to be looking at financial foundation. Financial foundation. I believe it's very important for us to lay a very good foundation for anyone to experience financial success. Oftentimes in life, you find out that adults who knew little or nothing about financial intelligence when they were growing up, they start struggling later on in life. And it's got nothing to do with not making enough money or making too much money. It's just simply because the right financial foundation wasn't laid, and they tend to then struggle with one aspect or the other of their personal finance. So today, I'm going to be focusing on laying the right financial foundation when it comes to an individual's financial life. So let's look at, let me just write down the lesson here. So our lesson today is going to be laying the right financial foundation. So that's what our lesson is going to be today. And we're going to start um, from a very, we're going to take a holistic view at an individual's life. And we're going to go into um, or breaking down an individual's life into various phases. Now, oftentimes, so this is the United Kingdom. So I'm doing this video from the United Kingdom. Most people are expected in the United Kingdom to retire at the age of 66. So that's when you're expected to retire, 66 years of age. So that is the typical retirement age in the UK. Right. Now, you would then think about it from when you're born till the age that you leave school, when you actually expect to start working. In the UK, the age at which you leave school, from when you can then make a decision whether you want to go to tertiary, whether you want to go for tertiary education, or whether you just want to choose a vocation in life and then just, sort of pursue. That age is about 16 years, right? So what I'm going to be recommending is that young people should actually start working from the age of 16. Whether you want to, go for tertiary education, you want to go to uni or you want to do some other things, I'll strongly recommend that at the age of 16, parents should encourage their children to just get out there and start working. Even when you go to uni, oftentimes you find that university students take on summer jobs and what have you. But from the age of 16, I believe it's important for a young person to start thinking about working, whether you want to go to uni or not. So let's, establish these 2 points. 66 is a retirement age. And from the age of 16, which I call here employment age, you start getting engaged in commercial activities at the age of 16. There is nothing stopping you from getting involved a bit earlier. From the age of 12, I believe parents should start educating the children, even much earlier than that, around finances. But from the age of 12, I think they should start getting some form of commercial activities that leads to them earning income. Okay. But officially, let's just work with age of 16. What then that leaves us, if you do the maths, you've got 50 good years of working or active working. So that gives us a total of 50 active working years. Okay, now even if you choose, like I said, if you choose to go to for higher education, I'll still expect you to start doing some level of work at the age of 16. Okay, now 50 full years of active work engagement. What are we going to do with this 50 years? Now, this 50 years is what you've got for you to create a financial success in your life. So that's the way you need to look at it. 50 years is the investment, is the asset you have, right? So that is time for you. And that time, you can improve the value of that time in order for you to trade successfully and create out of your life a financial success. In essence, it is what you do with these 50 years that will actually determine whether you are successfully financially or not. Okay, so we're going to be looking at these 50 years. And then what I would like to do at this point is to split these 50 working years into 7 cycles of 7 years each. 50 years, I'm going to divide that by 7, and that's going to give us a cycle, or that's going to give us 7 cycles of 7 year age, which we call a septennial. Okay, so let's do this septennial with this 50 years. So we're going to call this working septennial cycles. Okay, so what this is going to give us is going to give us those 7 years. So let's now draw a table. So what I'm going to do with this table is this is going to be your first 7 years, second, third, fourth, fifth, sixth, and the seventh. Okay. And gonna give us age. So this is gonna be from to. So starting from 16, that's when the first cycle starts for you. That first cycle ends at age 23, when the second one starts. That's 44. That's 51 to 58, and then 58 to 65. You notice, obviously, splitting 50 down into 7, you have 1 as a remainder. So 7 times 7 is 49. So what I've done here is 49 years in total accounted for here. But then you take a 1 as a bonus. Okay, so you got 1 year bonus. That's like injury time. Okay, in your personal finance game is your injury time. But here I've split it your 50 active working years into 7 cycles of 7 years each, which we call a septennial circles. Okay. Now you can start thinking about it, you know, giving yourself, thinking about what age you are right now. I'm thinking about what stage you are. For someone that is still like, 30 years old, a 30-year-old person really has just started their third, right, cycle of 30 years. So if you're 30 years right now and you're not doing so well financially, um, it's not that bad, right? Because you're still in the third cycle, right? You still have one, two, three. Actually, you have one, two, three, four, 5 cycles ahead of you. And you can make a decision today to actually turn things around. But you need to build the right foundation. So this is not just about wanting to rush and make quick money. No, not at all. This whole idea of smart money canvas is to actually give you a systematic way of building a very sound financial life, one that's going to guarantee that you have enough money to take care of yourself when you get older, and not just having enough money, but to have the right frame of mind, to have the right money mindset, because you built the right structures around you, and then you're going yourself to a point where you're comfortable around money, right? Your relationship with money is sound, and that's what we're going to be looking to do here. Now, to move us forward then from these septennial cycles that we're going to be working with, there are three key things that I want us to set as objectives for each of this cycle. Three key things. Now, the first one is what I refer to as your financial subject mastery. Okay, so let me write it down here. Financial subject mastery. So what this is all about is that for every septennial cycle, you're going to be taking a subject, a financial subject, which you're going to be mastering. You're going to make sure that you have the right knowledge and you expose yourself to the right experience on this particular financial subject. There are about 10 of them in total. So there are 10 financial subjects that if you can really, really master this subject, you're going to be okay. Okay. But guess what? You've got 50 years to learn that. You've got 50 years to learn that. And you don't need a whole 50 years to learn these um, financial subjects. But the first two cycles are very important, i.e., from the age of 16 to the age of 30. So those 14 years are very important for you to really learn these things, to learn the important ones, for you to be able to get a good head start in life. Okay. Now, the second thing that we're going to be looking at is what I refer to as your net worth target. Okay, your net worth target. And I'm going to be talking a little bit more about net worth when we get into the financial subjects, right? And the third thing, which everyone is quite cognizant with, is your savings goal. Savings goal. See, savings, I don't care what anyone thinks about or what you've heard about investing, but savings is the foundational rock for financial success. If you haven't got the right discipline to actually keep money, you're not going to be financially successful. That is the bitter truth. If you don't master the art of keeping money, of saving money, you're not going to be financially successful. You can have a lot of money, but guess what? You don't stand a chance of making those money really work hard for you later in life. It takes, first of all, for you to save before you can start talking about successful investing adventures. Okay. So these are the three objectives that I'm going to be setting for us at each of this cycle. So what I'm going to start with the last one, the third one, which is savings. So I'm going to put SG here. So that's your savings goal. So the question will be, within the first cycle, what should be your savings goal? Okay. Then the next one is your net worth target. What should you target to be your net worth at each of this cycle? Okay. So when you hit the age of 30, what should your net worth be at that point in time? Okay. We're going to be setting that as a goal as well. or as a target. And then the last thing is the financial subject mastery. So we're just going to call that FSM. So that's your financial subject mastery. Okay, right. Now let's take a look at our table. Uh, Okay, it's looking nice. Now, the next thing we're going to be doing now will be to start with what your savings goal should be. What should be your savings goal between the ages of 16 to 23? So at this point, I want us to digress a little bit. Okay, we're going to be digressing a little bit, and we're going to be talking about uh, the subject of professional aspiration. Okay, because see, in life, from age 0 to 16, all we are doing at that point is we're getting educated. We're getting prepared for the marketplace. We're getting prepared for the commercial world. That's what we're doing from ages 0 to 16. Okay. Now, what that tells me is that what you then do from ages 16 up onwards will be determined by the foundation or the preparation that has taken place between the ages of 0 and 16. So that means that your professional life, so when I say professional life right now, I'm talking about your calling in life, your vocation, um, your career, your business, whatever it is that you want to contribute, to the world. Yeah, that is your professional life. So when we say professional life, we're talking about, your calling in life. We're talking about your talent, your gifts that you've amassed. We're talking about your trade, you know. And at age 16, it could be that that is not fully formed yet, and that's fine. But at age 16, you're expected to have at least had a foundational understanding of what the word of commerce, is all about. So at that age, right, you're now then expected to start putting to use some of the knowledge, some of the skills that you've acquired. Okay. So that is so important, right? Your professional life or your professional aspiration is actually somewhat directly proportional to your financial aspirations. Not always, okay? And we're going to be covering that in future lessons. Not always. So someone could say that, I've chosen a career that doesn't pay much. So, I'm doomed. I can't be financially successful. Wrong. You're wrong. Because what I'm going to be teaching you in a smart money canvas lessons will blow you out of the waters. It will guarantee that anybody, irrespective of your chosen career, whether, the highest paid in your career is £50,000 a year, you will still stand a chance to be successful if you follow the structure and you do it properly. Okay. So your professional life is very important, right? But it's not an excuse. It's not an excuse for financial failure. Okay. Right. Now, going back to the savings goal, remember what we want to do is we want to start filling in these sports here. Um, so we're gonna put in the first number there, right? But before we do that, let's just sort of work out um, what the numbers for the savings goal should be. What should be that number for your savings goal? Now, what I'm going to be recommending here, these are going to be indicative numbers. Okay, so these numbers are purely indicative and they're not absolute, but they're realistic and they're achievable. Okay, it would require a lot of discipline. So what we really want to enforce here is discipline. You can't be successful without discipline, no matter how much, you know, uh, embellishment anyone gives to their product or service that they're trying to offer you out there. Buy this product, you're going to be, you're going to make tons of money, you're going to be successful. No, if as a matter of fact, making money doesn't guarantee your success. You know, I've been there, done that. You can make a lot of money. I've heard stories of people, who they've made good money, and guess what? They lost $1 million. Out of a story of someone that I know, um, close to someone that I know who lost $1 million within 1 year, $1 million, just like that. So making money, for starters, doesn't guarantee that you're going to be fully financially successful, right? But what we're going to be training, what we're going to be learning here will guarantee that for you. So the discipline is important. Having the right attitude is very important. So what we're going to be recommending for you, starting from age 16 to age 23, will be for you to save £50 per month. Okay, that's going to be your savings goal. £50 per month. £50 per month. What that would translate to is it will give you £600 for the year. And then if you multiply that by 7, yeah, that's going to give you over your first septennial cycle, is going to give you a net worth, right, of £4,200. So at age 23, you should have to your name a minimum of £4,200. It could be more than that, but should not be less than that. And again, guess what? Actually, it could even be less than that. Okay. If you were not able to really save £50 a month, it doesn't really matter, even if it's 50% of days. If all you can muster within the first 7 years is £2,100 in savings kept away, it's fantastic. It's not so much about this number or the size of the number. What's important is the discipline that you're able to follow through all throughout the 7 years. You're able to build up that nest egg for yourself. So we're going to post here £500. So this is monthly, right? Your savings goal is a monthly. So again, so here is £50. So that's £50 per month. Okay, so £50 there, and your net worth at that age is going to be, for that cycle, sorry, is going to be 4,200. So yeah, it's going to be £4,200. That's the first one. That's age 16 to 30. Okay. Now we'll move on to the next stage. So what we're going to do for starters is we're going to go through the savings goals and we're going to go through the net worth target. That's all we're going to do in this video. The next session we're going to have, we're then going to go through the financial subjects that we're going to be recommending that you master. Okay. So age 16 to 23, £50 a month. 23 to 30, we're going to be recommending £250 per month. Okay. And you see, it doesn't have to be a clear cut, you start with £50 a month and all of a sudden you just jump all the way to £250 a month. No, it doesn't have to be like that. It can be graduated. Okay. So you can just go within the first septennial cycle, you could ramp it up to 100, 150. You can do that, but make sure that at least you're able to either target a £4,200 net worth at that point in time. Okay. Yes, I know I'm talking about your net worth being in cash or capital, which is just fiat currency. There are other things you could potentially do because your net worth is a difference between your asset and your liability. And your asset can even be broken down into investments, cash, equity, pensions, and other things. But for right now, what we're focusing on in terms of your asset is cash. So we're just saying cash, right? And we're saying you've got zero liability. credit cards and all that, it's all zero. You're paying them all off at the end of the month. Okay. I know that the other factors like student loans that could come in and all that. We're going to deal with that, in a different session. But for now, just let's be simplistic about this and just go. This is just cash assets that I'm talking about here. Okay, so this one will give us 3,000 per year, giving us 21,000. Okay, in that second stage. So we're going to go. What we're going to do here is we're going to just record that. Yeah, it's 250 and here's 21,000. Okay. Third year, what we're going to be recommending, third cycle, what we're going to be recommending, that's between the ages of 30 and 37. We're going to be recommending that you save £500 per month. Okay. Now, the beauty of this is when you start setting these goals for yourself, okay, when you start setting these goals for yourself, you realize that the opportunity to actually be able to hit these targets will begin to show up. That's one thing I've seen, in my life. I've tested these. I don't set small goals. I raise the bar for myself. I say, this is what I want. And I've realized that over the years, one way or another, I always go that high. I always hit those high targets. Someone said the tragedy in life is not that we aim so high and we miss it, but the tragedy in life is that we aim so low and we eat. So really, don't there is more to you than just small thinking and not really aspiring for greater things in life. You need to stretch yourself. You need to place a demand on yourself because there's so much treasure in you. You are a moving value. Okay. So it's not just about the money. You are the money. You are the real money, even though you are in a raw form. So you need to spend time to refine yourself in order for you to be able to produce what's so valuable that other people will be willing to, you know, place a lot of money on. Okay. So £500 a month, don't let it scare you. It's absolutely possible. So that's going to give us £6,000 for the year. Again, that's going to be 42,000. That 7-year cycle. So age 37, you've added to your net worth 42,000. Of course, there'll be other things going on in your life, right? Are these different stages? And we can, deep dive into those. We can take each stage and, properly analyze it. What's going on in your life? You're getting married, you're raising children, you're buying a house. There are other things a lot of things that's going to be happening in your life that will require finance. But it's important for you to draw this straight number line for yourself, and then, yeah, of course, there'll be variations. The chart will not just be a straight line, but, if you drop that straight line for yourself, that trajectory is clear. Yet when you deviate, when you're deep, that's fine. You always have that number line to aspire back into. And there's sometimes that you will cross that line even higher, right? That will compensate for the deeps. So what we're doing right now is we're just setting that number line, so it's like you just drawing. Let me just do that for you, right? So this is you just drawing that line for yourself here. So this is your age 16 to age 66. Yeah, so those are the years. And you're just saying, and this is your £0 to, some X infinity going up. Yeah. Are you just saying this is a number line? Now, the reality in life is that as you go on, you know, you go like that. It's like, trading charts. Yes, that will happen. Don't worry about that. The most important thing is that you've set this straight line for yourself and you keep your eyes on it. Things will always correct. So this deep, yeah, will happen. but you're gonna have other mountaintop experiences that's going to compensate for the valley experiences, right? So don't worry too much about that. Okay. Right. So let's fill in the gaps now. So it's 500 a month, 6,000 and 42,000. So that is 500. What do we call this? 42,000. Now let's pick up the pace. Okay. So for age 37 to 43 or 44, pardon me, we're recommending 1,000. That's going to give you 12,000. That's going to give you 84,000. So we're taking 1,000 a month, 84,000 additional net worth. So that's 844, going 1,000, 84,000 added to it. Okay. Now, the fifth cycle, that's your age 44 to 51. At that stage, you should have mastered your, whatever profession or vocation, business, or whatever you're in at that point in time. And you should be doing fairly well. So 44 to 51. At that stage, we expect that you have a discipline of keeping 2,500 aside. And these, we're not talking about where you hold this at the moment. It could be going to your pension funds, it could be, you could use different vehicles, right? But the most important thing that we're talking about right now is just that discipline of you're increasing your net worth, you're expanding your discipline of saving more. So that's 3,000 for the year. Sorry, 30,000 or 3,000. So that's 30,000 for the year. And look at the magic here. Times 7 years, that is 210,000. Right. So by age 51, you should, at the end of that septennial cycle, have contributed to 110,000 to your net worth at that point in time. Okay. And there might be different things that's actually contributing this. It could be your pension, it could be, of course, it could be your pension that you're, putting money into. It could be some asset that you've acquired with the capital you build, and you're able to scale that. You're able to leverage the capital to be able to give you more income or returns on investment. So it could be a number of things, but make sure that by the time you're calculating it at the end of um, that fifth septennial cycle, you've had it 210,000. So we're going to take 2,500. So we're going to say 2,500 a month, and that is 210,000 added. Okay. The sixth, we're going to be recommending £4,000 a month. Yeah, it's possible. You can do it. £4,000 a month. And here, that's going to give you 336,000 added to it. Okay. So the last septennial cycle would say £5,000 monthly that you're adding to your coffers. Okay. And someone said, oh, you know what? That is just impossible. How could you possibly do that? Guess what? If I haven't done it, maybe, I might be able to share in the idea that it's not possible, but it's absolutely possible. It's possible because I've done that, consistently over a prolonged period of time, putting aside £5,000 a month into your nest egg. Now, that could be, like I said, it could be, you could put that into your pension, which I either recommend. You could put that into some portion of that into your ISA in the UK. Absolutely. Okay. So, but is definitely possible. And I'm not even 58 years old yet. Okay, right? I'm not even 58 years old yet. And, I've been able to do this. So you can also absolutely do that. Put aside £5,000 into your pension, and, it's just possible. And all that period of time, that 7 year period, now, someone might say, oh, but how can you consistently do over that 7 years? Sometimes, yeah, you're able to do it. Yeah, I've seen it in my life where over a period of time I was able to do that, and some other time, I was in a position to do that. That's absolutely fine. The most important thing, like I said earlier on, is we are building a discipline. We're building a discipline. That is what's going to guarantee your financial success in life. The discipline, right? A sense of responsibility that you are taking on. So £5,000 a month going in there, that's going to give you over that period 420,000. Okay, 420,000. Now, what I'm just going to do at this point, is just going to be a simple maths. So I'm going to be adding this net worth up, right, to give you an idea. Now, that this is not the summation of these numbers is not it's not the ultimate. This is not the climax of what you're learning here. It's this lessons is not about, oh, you know what, you can put this kind of money aside and by the time you're 65, you go over 1 million. No, 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 that's not what we're talking about. The essence really, if I could give you a sneak view into it, is the person you become in a process of going from your first centennial cycle to the seventh centennial cycle. You would have completely transformed yourself. You will now be the kind of person that is able to structure deals. You're going to be the kind of person that is able to do all kind of small things, right? That you find yourself now able to do. Okay. So that is what, this is more about than anything else. But nonetheless, it's a temptation to add these numbers there. I'm just gonna, sort of put those numbers, add them up. So 4,200 plus 21,000, right? Plus 42,000 plus 84,000 plus 210,000 plus 336,000 plus 420,000. That gives us a total of £1,117,200. Okay, so that is just pure math. That is you just over your 50 year. Remember, you still have 1 year reserve, 1 year bonus. You're not even 66 yet. Okay, so over that period of 49 to 50 years, you're able to actually rack up for yourself over £1 million. And like I said, it's not just about the numbers. I told you about someone who lost $1 million within 1 year. So it's not just about, you know, accumulating this money. Guess what? You can even make 1 million within 1 year at some point between age 16 and 66. You can make £1 million in 1 year. It's possible. But the most important thing that we are learning here is not about the big numbers. It's not the size. It's the discipline that you develop, in getting to that point, in getting to be the person that can now actually control a growing size, control the money in a way that the money is growing. You're not losing it, you're growing it. Okay, you're making it, you're multiplying it, you're growing it. That's what this is about. So this is the foundation. Um, this is the first lesson here, laying the right financial foundation. We're not done yet, because we're still going to complete the financial subject mastery. This is so important. I'm going to take a whole video session to cover this. I don't want us to jump into right now. So I'm going to come back and do this in another video where we're going to be looking at those financial subjects that you need to master. and begin to change your orientation around what they mean. You know, I'll give you a sneak view into it. I mean, income is an example, right, of the financial subject you're going to be mastering. A lot of people just think about income as, yeah, I'm earning wages. No. So I'm going to be training and giving you a mindset shifts, a complete paradigm relocation for you that will make you think about these things differently. And that's what we're going to be covering in the next video. So hopefully you've found this quite enjoyable and you can really relate with this session that we've had today. You can pause this video at any point in time, grab a pen and pad and start working out where you are. It is septennial cycle, and start seeing, how well you're doing. Draw your own graph. Yeah, draw your own graph and figure out where you are. You know, if you're 35 years old right now, you know, draw the graph and see, am I very far away? Plot your own graph. Am I very far away from that line? Like I said, these are indicative figures that we've used in the table, but you can plot that, graph you can plot that sort of chart and begin to mark where you are. For some people, they might be here, they might be very close to zero. But guess what? It's better to be late than never. Now that you're knowing these things, you might be in your fifth, you know, septennial cycle, but it's not the end of the world. It's not the end of the world. You can begin to actually do something about it right now. And, for subsequent videos, we're going to be dropping some nuggets on how you can go about this thing. So thank you everyone for taking that time to watch this video. Subscribe to our channel so you'll be able to get alerts when we release future videos as well. So till next time, take care of yourself and have a great time. Plot your graph. Start getting into the groove of it. And I'm sure you're going to find this fascinating and it's going to really contribute to your financial success. So thank you very much. All the best.